Welcome back to my channel. My name is Marsh Pillai. If you guys are tuning in for the first time, I make videos about money, all things. I upload every Wednesday and Sunday at 6 p.m. Central. Before we begin, I'm gonna ask y'all one thing. Don't be a stranger, hit the subscribe and join the family. So I'm pretty sure you guys have heard about the term cash is trash, credit is king in the last 2 years. Is that really true? We're gonna talk about in detail. So in this video, we're gonna talk about what a credit score is, why credit score is very important, how to get your credit score up if it's low, and how to maintain once you get it back up. So I suggest you guys to watch the full video. Let's get started. So what is a credit score? Credit score is a 3-digit number ranging from 300 to 850. So the lower the score, the worse, the higher the score, the better. It's important to check all three when you're checking your credit score. Now let's get to why a credit score is highly important. Having a high credit score gives you more buying power, more leverage. Let me explain that. Let's take a simple example of an auto loan. Let's say $50,000 loan for a 5-year period, and the interest rate is 1.49% APR. So if you plug these numbers into the calculator that you find online, your monthly payment is going to be $850 roughly, right? So that's similar to the car that I have. Let's say if your credit score is poor, something under 500, then your same term monthly payment would be $950. So you see that? That's almost $100 difference per month. You might just think that it's just $100, it's not too much, but when you stretch that over for 5 years, that's gonna add up. So for the entire term of the loan, for a 1.49% interest rate, the interest paid would be $1,200. But if your credit score is bad, and because of that, if your interest rate is over 5%, let's just say 5.49% instead of 1.49%, then the total interest paid over the term of the loan is going to be $7,200. That's almost $6,200 more that you're paying that you wouldn't have if your credit score is up. That money could have been invested, could have been spent on something you want otherwise. You know, there's so many different things that you could have otherwise done, but instead, you're just paying it over the loan, which was not needed. So same thing applies over a mortgage loan or any other loan. So it's very, very, very important. I can't stress this enough to get your credit score up so you have more buying power and you pay less in interest and save that money and put it somewhere else. Now let's get to the part of how to improve your credit score. I'm gonna give you 5 tips that I did to improve my credit score. So as far as the timeline to increase your credit score goes, I can't sit here and lie, man. You're not gonna expect a credit score to jump from 500 to 700 in just 2 days. That's not gonna happen. I can't do that. But some of these tips that I'm gonna share will increase your credit score quickly, maybe within a month, and some of these items may take a little bit longer, from a few months to a year. So I just want to give y'all some realistic expectations. I came to United States back in 2012. When I came here, I did not have any bank account, I did not have any prior loans, so my credit score was 0. But over the course of the years, I understood what credit score is and how important it is to improve your financial situation. So I was able to improve my credit score from 0 to 780 following some of these tips that I'm going to share with you guys. So let's begin. So before we begin, we have to understand how credit scores are made of. So credit scores are made of 5 different things. First thing is your payment history. So this is how proper you are in paying your bills on time or not. And this makes up about 35% of your entire credit score. So that's a huge chunk. It's important to pay your bills on time. And the second thing is the credit usage. So this is basically how well you are utilizing your credit, meaning do you have active debt, right? We're all trained to think debt is bad, but in credit terms, having debt is good as long as you pay those bills in time. This makes about 30% of your credit score. Again, this is a big chunk, so it's important to look into this carefully. So the next item is the age of your credit lines and the accounts that you have. So the longer you have, the better your score. The older your accounts are, the better it's going to be for your credit score. So this makes about 15%. And the next is your credit mix. And this makes about 10%. So what is a credit mix? So credit mix is just the fact of having different types of debts. For example, like auto loans, mortgage, those are two different types of debts. And because of that, having a variety of debt like that will help your credit score. And the last item is new credit inquiries. So this makes about 10%. This is basically when you open up new accounts and things of that nature. These are the 5 things that makes up your credit score. So now that we know about it, let's see how we can improve. Here are my 5 tips to increase your credit score in no particular order. So the first tip is adding someone with a higher credit score as an authorized user. So it could be your spouse or your family or your friends. In my case, I added my sister who had a higher credit score as an authorized user, and within a few weeks, my credit score jumped. This is one of those tips that will cause an immediate effect on your credit. It'll boost your credit score up. But on the other side, if you do not pay your bills on time, if you do something you're not supposed to do, then it will also decrease the credit score of your authorized user. So basically your account is sort of linked. So it's very important to pay your bills on time so you don't affect your authorized user's credit. Second tip is to reduce your debt by paying off some of it, right? So typically having a 5 to 10% credit utilization would be ideal. So if I were to explain that, if you have a credit card that has a limit of $10,000, a 10% utilization would be up to $1,000. So if you purchase things and pay it off before it hits $1,000, that's basically a 10% utilization. Having a low credit utilization is very important. So even if you're not able to do under 10%, try to keep it under 30%. So anything over 30 is going to cause an impact on your credit score, and it's going to weigh you down from increasing your credit score. Third suggestion that I have is to simply ask for an increase in credit limit with your bank. So this is related to item 2. Basically, when you increase for a credit limit, and let's say from 10 grand, you increase your credit limit to 20 grand. Now your credit utilization goal of 10% is not $1,000 anymore, it's $2,000. So it basically doubled. By simply asking for a credit limit increase and having the same expense in the credit usage every month, you are lowering your credit utilization and thereby increasing your credit score. The fourth item that I have is also related to number 2 and 3. Sometimes your banks may refuse or deny your credit limit increase. And in that case, the best thing that you can do is go out and open a secured credit card with a different bank. A secured credit card is basically you are putting down a deposit in a bank, and let's say for $400, and they will give you a credit card with the limit of $400. So it's not a huge risk to the bank. So that's why the banks want you to do that. So to improve your credit score and to have a good track record, or as you as a consumer, it's going to help you decrease your credit utilization because it's going to basically increase your limit. Our example, let's say if you go buy a $400 secured credit card, you have a limit of $10,000. Now your limit is $10,400 because of the secured credit card. So if you have the same expenses, your credit utilization is automatically bumped up. So that's how it works. So number 5 is talk to your debt collectors if you have any debts and pay them off. I mean, you can't hold this. You have to pay them off. So it goes out of your credit history, and that is going to improve your credit score. The way you do that is first get your credit report from one of these credit report providing websites like annualcreditreport.com or Credit Karma, So any one of those free credit score providing websites, and look thoroughly for all the collections or report that you might have. If there are any inaccuracies, report them. But if these collections seem legit, start making them calls. Try to settle them with a quarter to the dollar, and that way slowly fix all your collections, and this is going to improve your credit score along the line. Those are my 5 suggestions to improve your credit score. If you follow those things, your credit score is going to jump up and go all the way up to 750. Now, next comes the task of maintaining it, because that's also a big task. Here are the 5 things that I do to maintain my 750 plus credit score. First step is to monitor your credit report, because what gets measured gets improved. You can sign up for one of these free credit providing websites like Credit Karma, or banks these days started giving credit score updates as well, so you can follow your bank to get your credit score each month. So as long as you monitor your credit score each month, that's a good way to maintain your credit score. Number 2 is to pay your bills on time and pay twice a month. Even if you forget to pay your bill once, it can cause a dent in your credit history, and it can stay up to for 7 years. So it's very important, pay your bills on time. Do not miss it. The better way to do it is set up like auto payments and stuff, so you don't even have a chance to miss payments. 3 is having a car loan. Now, I'm not saying you have to go out there and get a new car loan, but what I am saying is if you already have a car, instead of paying it in full with cash. So I like to finance 40% of that loan, just because of 2 reasons. Number 1 is to have a consistent credit utilization. Number 2, I can put down that 40% of the money somewhere else and make more money. Because when you think about it, the auto loans are 1.5%. So that's pretty low compared to even inflation. If I were to put that money in stock market, I can make somewhere between 8 to 12%. And same with real estate as well. Number 4 is to have older accounts open and not close any of the previously open accounts that I've had for a number of years. So when you do that, your credit score is going to be maintained. Number 5 is to not get a whole bunch of new credits in a span of a year or more. So if you're trying to get an auto loan, shop for interest rates to get the best interest rate, that's fine, but make sure you wrap it up within a month. So all the new credit hard inquiries are within a short compressed time frame, and that's not going to cause a damage in your credit score, and your credit score will be maintained. So these are the 5 things that I did to maintain my 750 plus credit score. This wraps up today's video. I appreciate y'all watching. You could be anywhere else in the world, but you're here watching my video. I appreciate y'all. So with that said, I'm out, and I'll see y'all on the next one.